Welcome back in, folks. This is the 7 financial blind spots, and we're on number 4. And this is a big one to me because I see it all the time, the misconception that as you retire or when you retire, somehow magically your taxes are going to go down. And one thing we know for sure in life, we know about death and taxes, but one thing that's unsure is where the taxes are going to be. So, Freeman, isn't it a myth that taxes are going to automatically go down when you retire? That's a myth, isn't it?
It has to be. Well, it's a fact that it is a myth.
Yep.
We've seen taxes increase. I looked at the taxes for 2017 versus 2016. Well, we're paying more taxes. We are paying taxes on just about anything, and when you retire, folks, you can expect your tax base to go up. Let me give you a good example.
Sure.
Let's say, for example, we have an individual who is in a very, very high tax bracket.
Right.
And we know it's 70 and a half. This individual has to take a distribution.
Minimum required distributions.
Required minimum
every single
distribution.
Year.
Every single year. And the percentage will, of course, increase. Well, that's a taxable event. But the amazing thing is, you are penalized if you don't take that RMD. That requires 50%.
50% penalty.
50%
so
penalty.
they give a 10% penalty if you take money out of IRA too early.
59
and a
and a half.
50% penalty if you don't take it out.
Exactly.
That's government gone wild again, isn't
exactly.
it?
Again, folks, you can expect your taxes to increase. Now, of course, we have experts like Coach Pete here can help you minimize your taxation. A good example of that, I had a death claim. We have sister, brother, received an inherited IRA. The brother, of course, we did an inherited IRA, stretched the taxes over his
Very
life,
big, yeah,
life
very good way to
expectancy.
shrink that taxes down.
Unfortunately, the young lady, she took the lump sum already, and it was a hefty lump sum.
Mm-hmm.
So therefore, it was a taxable event on top of her earned income, which is taxable. And plus, the young lady was under age 59 and a half. Now, she had the choice of either stretching that IRA distribution over her life expectancy, minimizing her taxes, but she chose to take a lump sum and make a purchase of a depreciating object, such as an automobile. So,
which a lot of people do.
Exactly.
Boats, houses, whatever. They buy stuff that goes down in value with inheritance before they pay the taxes.
That's right. So we can, if you're watching us here, folks, taxes will not go down when you retire. You can expect that. The taxes will steadily increase, but we have strategies which we can help many of these consumers minimize the tax bite.
The theory, I think, on that is that, and I don't like this theory at all, and I want to aim for my clients to not have this happen, but the theory is you're going to make less money in retirement.
Yeah.
Therefore, you have less taxes to worry about. But if you're out there and you want to retire, wouldn't you want to retire with 100 to 110% of your income?
Exactly.
The working income, not 70 or 60%.
Exactly, yeah.
And so we aim to at least have you at the same income level when you retire, which that's the goal, isn't it? Because in retirement, every day is a Saturday. When you're working, Saturday only comes once a week. But when you're retired, every day is a Saturday. And I don't know about you, Freeman, but I spend more money on a Saturday than a Monday.
Exactly. Yeah, right.
So
Yes,
when we
do.
come back, that is about taxes, folks. It's all about getting the right plan, learning about the stretch IRA, making sure that your beneficiaries understand if you pass away, what's going to happen to that money and how they're going to have to pay taxes if they don't do the right thing. Get proper estate planning in place with life insurance that's tax-free if set up correctly. All these things go into a right financial plan. So taxes are a big enemy, but they don't have to be as bad as we look at them if we do the right planning ahead of time.
Exactly.
And so when we come back, we're going to talk about a controversial subject here on the 7 blind spots. It's about paying your house off early or not. And we're going to make a definite statement, but then we're going to back off that and tell you why it makes sense and why it might not make sense. We'll be right back after this. And again, justaskfreeman.com for more information.